Hi, today I'm going to talk about what's the best for you to go ahead and pay closing costs or not pay closing costs and just focus mainly on the lower interest rate. What I always tell my clients is you want to look at your mortgage as a complete package. What is your interest rate, the total lender closing cost? Is there any prepayment penalties? Is the interest rate fixed or adjustable? How long is the interest rates locked in? Because we can go anywhere from 30 to 90 days when you lock in a loan. And how fast can the lender close on the loan? You want to make sure that when you do lock in a loan, that the lender is not going to be delayed for any reason and break your lock, and then you're exposed to the market rate. So a couple things I'd like for you to consider. Let me go ahead and I've created a spreadsheet here. And this is just a conventional program. Keep in mind when you do your payments, that includes principal and interest, taxes, and insurance. I'm only doing principal and interest because the tax and insurance monthly amount would be exactly the same. It really doesn't matter. And if you pay less than 20%, it's possible that you might have mortgage insurance on your loan too. So I want to try and keep it simple so that everyone gets the concept of this. In the Plan A, we're going to get a $350,000 purchase price, putting 20% down. That gives us a loan amount of $280,000. 30 years, 4.25%, 1377 and 43 cents would be your principal and interest payment. So the lender fees that I'm showing here in title fees are, again, just an estimate for illustrative purposes. Each transaction is going to be different, so you do need to talk to your lender and your title company to get the exact figures on that. The loan origination fee is always typically 1% of your loan amount, which is $2,800 in this example. A lot of lenders do charge an administration fee, and that varies. An average is probably around $400. A lender underwriting fee, they may or may not have that, but typically that's around $300. And then the processing fee is anywhere from $200 to $700. I've seen them all over the place. So I just plugged in $400 there. The appraisals really have changed quite a bit. I'm in Denver. We used to be at $350, but this year it actually increased to $700, and it's taken 3 weeks to get the appraisals right now. So again, the appraisal cost, your lender would know how long it would take to get an appraisal and what the actual cost is. Title insurance policy, the seller normally pays your title insurance, but however, in real estate, that's negotiable. So if you want the seller to pay your title insurance, then that'll save you some money. If not, then you're going to end up paying that. But keep in mind, if you do get a loan on it, there's on the title insurance, it's called endorsements. Endorsements would be probably a minimum of $500. So I'll go ahead and change that to $500 in this example. And then your title closing fees, usually the title company will charge you $160 just to do the loan closing, and then your title real estate side closing fee, again, it's negotiable in real estate, so you can pay all of it, the seller can pay all of it, or you split it, which is the most common. So an average, you'll probably pay somewhere around $375 if you're getting a mortgage on the new purchase for that new home. Recording fees, this is recording your deed of trust, $25 for a tax cert, find out what the taxes are, real estate taxes. Overnight fees is a fee for the title company, and then flood cert. So again, a typical loan closing fee on a purchase is about $5,500, and it could certainly go higher, can certainly go lower too, but that's really what we're seeing here in the Denver area. I'm going to go ahead and change Plan B title policy to $500 again so that we're comparing apples to apples. So on this one, what I'm asking the lenders to do is go ahead and pay all the closing costs. And what they do is the lender gets paid by your loan origination fee, which is right here. It could be anywhere from 0.25% to 3%, just depends on what the lender wants to charge you. But they also get a yield spread premium or a servicing premium. There's a lot of different words that they could use, but bottom line, it's a back-end commission. And what that means in plain English is that if the par rate, the rate today with you paying all your closing costs, is at 4.25%, then they could increase the interest rate up by 0.25%, and in this price range, they should be able to pay all or most of your closing. So just by increasing your interest rate or note rate up to 0.25% or 4.5 in this example, that increases your monthly payment. So your monthly payment would go up $41.29. But when you take that amount of money and divide it into your total fees that you're paying, which is $5,500, it literally takes you 11 years just to break even. So what I'm seeing with most of my clients, from 3 to 7 years, they'll usually stay in their property, then they'll end up selling. My parents stayed in their house for 30 years, but that's not the norm right now. Even myself, I've moved many times. But I'll stay in a property 5 to 7, maybe 8 years, and then I'll sell it, get into a different type of home, and go from there. So what I'm pointing out to you here is that if you elect to increase your note rate or increase the interest rate up a little bit, you're actually saving money, because you would have to stay in the property 11 years or longer just to break even. So I hope this will help you out and have you think of something else. This is what I do when I purchase properties. I also bring it up to my clients, and certainly all my family members. Go with Plan B, because it just makes a little bit more sense doing it that way. That way the lender is still making their money, but it's a better financial position for you. If you have any questions, certainly give me a call. Again, I'm Doug Houck. Phone number is 303-400-0472. Thank you.